Good afternoon, everyone. Hope you're doing well. It has been a long time since I published one of these videos. And as I was sitting here cleaning up the office before going home, I said, gosh, I haven't done a video in a long time. A lot of people send emails wondering what happened to the videos. And frankly, I don't have a good excuse other than I published on the blog and I just haven't sat down and prioritized doing a video. So here we go. I thank you very much for watching. I appreciate it. If you like the video, please give me a thumbs up on YouTube. And here goes. I will do some more because I've got a bunch of ideas and I've been writing so much, and I'm sure some people would rather not have to sit and read, but maybe sit back and just listen to it. So today I thought we would talk about as I'm doing this, it is what? It's the no, not 31st, December 21st. So I think it's an appropriate time to talk about some last minute tax tips on the year. Some are kind of frankly boring and stodgy, and you're gonna struggle through listening, and others may be more applicable. But this is a quick one. I'm not going to drone on for 30 minutes like normal. So here goes. Last minute tax tips for 2023. Number one, if you work for a company, if you get a paycheck W-2, I would check your withholding. I mean, personally, I always do a dry run through of my taxes the first week of December to figure out where I stand. Am I going to owe? Am I going to get a refund? So I can properly adjust my charitable donations, my tax. We'll get to that in a minute. But in any case, my recommendation is make sure you took out enough money out of your paycheck, especially if you got bonuses, if you got 1099 income, or other things where you may not have paid taxes so far. Most people do not like getting surprised on April 15th with either a big tax bill or having to pay quarterly estimated taxes the following year. So that's number one. Number two, if you're able, why not defer income that you may get now into 2024? That seems like an easy thing. Almost every year you do that. Why pay tax now when you can pay it down the road? Additionally, as I recall, the tax brackets are indexed for inflation, so that inflation we know has been high. Next year's tax brackets are going up, which means it'll take more income to get you into that next bracket. So if you can defer income, I would strongly consider that. Deductions. I always talk about bunching deductions. So you have to figure out, do you have a quick and easy 1040 where you just have a few things, you take what's called the standard deduction, and that's a write-off, or do you itemize? So if you're on the cusp, if you're kind of on that line where you don't know, think about bunching things either all in 2023 or all in 2024. Deductions would be things like charitable contributions do more in one year, less in the next. Other write-offs could be for medical purposes, for things at home, home improvements, home office, etc. But if you bunch deductions enough, and that gets you from the standard deduction into itemizing, then you can save some money on taxes there as well. Tax loss harvesting, I write about it all year. When markets are down, I hammer this point. As part of a value add that we do for clients, we're always tax loss harvesting. I don't wait until December 21st. We do it whenever there's, I don't have a line in the sand, but generally a 10% loss on something. I start contemplating, do I want to sell Delta Airlines and buy United? Do I want to sell the, T. Rowe Price growth fund and buy another growth fund, or is making that one up? So we do it throughout the year for clients. I think if advisors don't, they're either lazy or stupid, frankly. It's the easiest thing you should be doing. And at this time of year, if you've done your tax loss harvesting, 2022, frankly, was easy because it was a horrible year in stocks. They're down 20 to 30. Bonds are down 13%. A lot to tax loss harvest. 2023, if you did it early in the year, like we did in March, you benefited. Some people did it in October, also a good benefit. And now you could decide, do I want to take gains against those losses, or do I want to roll forward the losses? But it puts you in the driver's seat. Let's see what else. Probably a little late on this, but mutual fund distributions. Yeah, you know what? December 21st, I'm guessing most companies have already done their distribution. So scratch that. My apologies. I'm too late. Um, RMDs. So if you have to take a required minimum distribution, RMD, and you haven't done it already, make sure it's done before the 31st. Don't wait till the last couple days. Big places like Fidelity and Schwab and Vanguard get bogged down, less staff. You want to make sure that gets done. While on the topic of your RMDs, I got a little tongue-tied. What I'd say is this: a lot of folks can do QCDs, qualified charitable distributions, up to $100,000. So that can satisfy your RMD, but it doesn't get included in your income. So it's not like taking 100,000 out of your IRA, you pay the tax on it. That's what we do. And then that puts you in a different tax bracket. With a QCD, it satisfies your RMD. It doesn't get included in your income, and that money goes right to a qualified charitable institution. Highly recommended if you're thinking about RMDs late and you have charities to give to. And what else? Lastly, I'll say this. Again, it's December 21st. So if you're able to bump up your retirement plan contributions, SEPs, which you can still do into 2024, but really if your 401k, 403b, if you can take your last paycheck, if your company allows that, put it all into your 401k, 403b, what's the downside there? Obviously, you need the cash flow to survive, don't get me wrong, but that's another way to cut some taxes. So there's a few year-end tidbits. I hope you enjoyed it. Again, if you like it, give me a thumbs up on YouTube. If you don't, my apologies. And next year, I'll make a note to do it earlier. I will be producing, I think, some short videos as 2024 approaches, because it's going to be a very different year than 2023. And I'll leave you with this. I always do my fearless forecast as the year begins or the year ends. Last year, if you remember, and how could you not, because I've taken a couple of victory laps along the way this year, but I came into 2023 with the highest conviction I've had in 34 years. I felt super, super strongly that it was good. I labeled it the year of the bull. Stocks go up, bonds go up, gold goes up, crypto goes up. I thought stocks could be up as much as 30%, but a minimum of 15 to 20. Now it's a year later. It worked out fairly well, which I'm glad, but I don't run money based on my forecast, because there's nothing. It can change tomorrow. It could change in a month. It may not change at all. I was bullish the whole year, as you know. I thought we'd have a couple of pullbacks, which we did. But I don't think 2024 is going to look like 2023. And I think we've got some punishment coming for those who hopped on this incredible momentum bandwagon late. So I warn those of you who came into the market late, be careful. The market has a way of punishing the masses. So do we get to 2024? I think so. But what I'll write on the blog tomorrow or the next day is I'll be more concerned if the stock market does not make a new high before year end. I know it's only 10 days away. The stock market, it's supposed to go out, make another all-time high before year end. If it doesn't, I will have deeper concerns for Q1, but I do have concerns for Q1. So take that for what it's worth. I appreciate it. If you don't read a blog or see a newsletter and you celebrate Christmas or Kwanzaa or any other holidays coming up, I wish you a phenomenally safe, happy, healthy, and peaceful holiday season, and I'll be back soon. Thanks again for watching. Bye-bye.